GoPro will announce results Wednesday after the close. To prepare for the release, we're going to take a look at the latest guidance that management provided in their pre-release last week and see where the consensus estimates stand relative to that guidance. For this analysis, we'll be using our GoPro earnings model. If you'd like to download this model and plug in your own assumptions or just follow along with us, visit our website gutenbergresearch.com, click on the free models tab, and then just scroll down to the GoPro model. And you can see it downloads right away. And if you're new to our approach, please visit the Education tab. You can click on this thumbnail here to get an overview of our entire financial modeling and equity valuation approach. So for this quarter, there aren't going to be a whole lot of surprises since the company already pre-announced results. It's really going to come down to the guidance that they give us for the next fiscal year. And there's a few things that we should think about here. First of all, we know that the Hero, Silver, and Black lines have probably had deep discounts during the holiday season, so that's going to impact the average selling price in the segment section. You can see we've brought it down to $240 for the December quarter from $251 last quarter. And that's actually a pretty steep discount because we know that the fourth quarter should be the strongest ASP. And then there's also the Session line, which also had ASP declines in the fourth quarter, and we know that because the retail price is showing at about $199, which is down from the original $399. There are some potential long-term catalysts that we should keep an eye on. First, we'll see a GoPro drone this coming year. Also 360-degree video for virtual reality applications, and then there's also the media segment earnings. However, it's unlikely that any of these would provide meaningful near-term contributions to earnings. For this quarter, the focus is really going to be on the reallocation of resources and what management's plan is to get out of this hopefully short-term decline in average selling price and contraction in gross margin. So those are the items that we'll be really listening for on the call. So let's take a look at management's guidance and see where the street stands relative to that guidance heading into this quarter. So on the revenue side, they gave us guidance of $435 million. The street is almost exactly in line with that 435. And they gave us $1.6 billion for the full calendar year. Obviously, you can back into that number. There's no surprise there. Next, we'll move to the gross margin, and this is a little bit tricky this time around because there are so many puts and takes here. So management says that gross margin will be 44.5 to 45.5% if you strip out the impact of the Hero 4-session price protection charge, the purchase order commitments, excess inventory, and obsolete tooling expense. So you'll remember on the last video that we published, we thought the street would give the company credit for those items since they're likely one-time and non-recurring in nature. But when we checked the consensus gross margin estimate after this pre-release, it was closer to 35.4%. So in fact, the street has not given them credit for those items. And so if you scroll down to the gross margin section, you can see that we've set it equal to the consensus estimate for the fourth quarter here. Next, we move to the operating expenses, which management guided to be between $150 million and $152.5 million on a non-GAAP basis. So in our attempt to get back to the consensus diluted EPS on a non-GAAP basis of about 0 cents, we set it to the low end of that range at $150 million. So even when we hit that low end of the range, we could adjust the other income and the provisions for tax, although management had given some guidance on tax to be about 23%. We couldn't quite get to the break-even mark on a non-GAAP basis. So we left it as is. We didn't change that because we don't want to break the model here. And really, for this fourth quarter, it really doesn't matter if you move this by a penny or two. It's going to really come down to what happens in the next fiscal year. So besides the next fourth quarter, we've also calibrated our model to meet consensus estimates for the next year. So this should give us a pretty good indication of where shares should move after the release. Just keep in mind that the next 12-month price earnings ratio has been fluctuating quite a bit. There's been a lot of volatility in trading here. Right now we're estimating a $12 price target using our price earnings ratio on an X cash basis, and we have a $20 price target using our discounted cash flow valuation, which models earnings into the next 5 years with a terminal value. So that gives us a 50-50 based approach of $16 per share. But this could definitely move quite a bit if we hear some more bad news for next year. Be sure to check back after the release. We'll update this model and publish the new results. And also join us next week for the Google, Ferrari, and Yum Brands releases. And if you're interested in financial modeling, be sure to subscribe to our channel.